Come with gold back then, probably like, oh, everyone can just go there and buy one gold necklace. That was a time that we really thought that, oh, gold must be physical. My client used to tell me, you got some money, maybe about 80,000, couldn't get a 1 kg gold. But then, looking back now, I think I regretted not buying.
What are your thoughts about it? Will crypto ever replace gold in your opinion?
In my humble opinion, I would say
gold has hit an all-time high at the back of the current geopolitical tension, inflation, de-dollarization, and all the things that's happening in the world today. Now, the question is, what do we do with it as a consumer? Do we buy some gold? Do we use gold to predict the market? Or what should we do in these kind of times? So to answer the question, I brought in a special guest with us. His name is Kelvin, and he is the head of commodities and financial derivatives at Affin Hwang Investment Bank. Can you give us a little bit of an introduction about yourself? How long have you been in the derivatives field?
I've been in this field more than 2 decades now. That actually exposing my age as well. So yes, ever since I came back from Sydney, after my uni days, I started with Hwang DBS then, which is also securities firm, and I went to another 2 more stockbroking houses before I make a comeback to Affin Hwang. You might know, you might not know, Affin Hwang was a merger of Affin Bank and Hwang DBS, and for me it's like homecoming.
Right.
So it's my second time here, but it's so much better now, it's so much different now.
So 20 years in this field. Can I ask you, when you first joined this field at the time, how much was gold price?
Whoa.
Do you still remember?
That must be so low. Don't talk about 20 years, just talk about probably 6-7 years ago. Price was 1,001, I think. And how much is it today? 2004? More than 100%, right?
Wow, yeah. So I guess by the time, when the first time you joined this industry, it was probably around the 3-figure range, right?
More likely, because 6 years ago was 1,001. Yeah, definitely below 1,000.
Right. So over these 20 years, how have you seen the gold market evolve? Like, is there any significant incident that made you remember this thing? Like, wow, that's gold for you, in a sense.
Come with gold, people like me, I would probably think of those jewelry shop. You know, when we were young, parents went to the gold shop before Chinese New Year, buy from the counter, off the counter. If you compare the prices then and now, it's so much different. Back then, probably like, oh, everyone can just go there and buy one gold necklace. That was a time that we really thought that, oh, gold must be physical. If you go to jewelry shop, then you can get, goldsmith shop, you can get gold. But now, after grads and coming to the career, the working life, they know, oh, actually there's something called futures, you know. Not like physical only, as we used to think, but we also can buy something in the future.
Yeah, I still remember that early days, whenever we talk about gold, it was like you say, right? It's always talking about physical gold.
Yeah.
Right, and it became very inconvenient for many people, and only the richer people would go and acquire it because storage is always a problem, right? Now, then subsequently there was paper gold. Then at first many people were also a little bit afraid, but eventually the market got used to it. And today we are not just talking about paper gold, but also gold futures. Gold options, right? Derivatives that surrounding it. So there's this whole ecosystem that gold is being used in the investment market today.
You're right. Yeah. Not in the investment. Talk about governments and central banks. If you look into it, there are so many, I would say, countries who are huge and big enough, wealthy enough. They store a lot of gold bars, like central banks of Russia, China's government.
Oh yeah.
Lots of it, right? You'll be surprised if you have the chance to go into a war. I think it's crazy. So the usage is very different now. And not only the physical gold that you used to have, we can even have paper gold. Like you said, you want physical with storage, there'll be different thing. But now, it's not only investment. If you ask me, it can be hedging tools. It can be hedging against the interest rate or hedging against your currency. Right? Like many years ago, I recall this incident where I think it was 2018 or 2019. My client used to tell me, hey, Kelvin, you got some money, maybe about 80,000 RM, couldn't get a 1 kg gold. I was like, hey bro, you must joking, how would I have such money to buy gold bar and put it at home, Buying it is one thing in terms of whether you have the money to buy or not.
That's right.
And second thing, where do you keep it, right? Do I keep it in the bank safety box or do I keep it at home? You keep it at home, where do you keep? That's also another question. But then, looking back now, I think I regretted not buying.
Right.
It's crazy. If I make a lot of money from there, easily, like I said, more than 100%, if you compare 2018, 2019 to now.
Let's talk about futures trading. Now, I used to think futures trading was risky and not really relevant, especially if you're focused on stock investment. But after my chat with Kevin from Affin Hwang Investment Bank and also together with CME Group, I realized just how powerful futures can actually be, even when you're just focusing on stock investment. Now, you can actually use commodities future to hedge your investment, protect yourself from market swings, and even maximize your gains. Now, if you're curious about getting started, click the link in the description to open a futures trading account with Affin Hwang Investment Bank. Trust me, it's a great way to explore new strategy and add another layer of strategy and security to your investment portfolio. Now, if you're really thinking about deep diving into this topic about futures, you won't want to miss an upcoming event on September 25th at 6 p.m. My friend Frankie from the FAQ show will be moderating a panel with top experts from Affin Hwang Investment Bank. They will be discussing about how the upcoming US election could impact the futures market. I'm sure it's going to be an eye-opening session. So make sure you grab your spot with the link in the description below. Anyhow, whether you're a beginner or you're looking to expand your trading and investment strategy, this is your chance to learn from the best and get ahead from the market. We'll see you there. You touched on one thing just now, saying that many countries actually store gold as a reserve. So now, one thing we did realize is that over the past few years especially, there was a report that actually came out that said that many countries' central bank are stocking up of gold.
Yes.
For the fear of the current global situation, especially when it comes to de-dollarization and so on.
Correct.
Maybe can you enlighten us a little bit? What's the relationship of gold and all this de-dollarization issue actually?
Okay, now I think we should zoom into the word de-dollarization. Right, as we know, say de-dollarization means we do not focus, or we're trying to deviate or moving away from using US dollar as a benchmark, or we depending too much on the US currency as a medium of transactions, right? Yep. So alternate to it, we do not know which currency can replace US dollar, or whether we can replace US dollar one day.
Right.
But at least we know one thing, something called gold, where it's been proven as a safe haven forever, safe haven assets, and from barter trade years or eras, until today, up to today, it's still one of the tools, or should I say, asset that it will not depreciate. It will have its value anyway, depending how much, right? Be it war, be it geopolitical tension, as you mentioned, be it central bank decisions, or interest rate, or whatever not, gold is always there as the tool that people will want to acquire. Right. Hence, it makes sense why central banks are stocking up the reserve of gold in their country. At least one day, if you do not focus so much on US dollar, more likely or not, gold will be another benchmark.
Right.
Even if it's not direct gold, somehow another currency will be depending on gold as well. So it's a safe place to go.
So can we say that generally the whole idea is this: as we deviate and move away from depending on the US dollar system, as the world is getting ready for it at least. Yeah. What happens is that there still leaves some sort of a void, right? Which is, if you don't depend on the US dollar, then what are you going to depend on?
That's right.
And for right now, there is still a big hole about it. Although BRICS has been saying that, hey, we want to come up with our own currency, and right now they say that maybe it's not going to be a currency, it's going to be a payment system. Then they're going to allow direct exchange. So what a conversation that I always have with Frankie and my other colleagues is, cool, that's a great idea, but what are you going to benchmark it against then? Because there still need to be some sort of a benchmark, right?
Yes.
Cannot I say Malaysian ringgit is worth that much?
Yeah.
Then we sit down and negotiate every round.
Yeah.
It's going to be very, very troublesome for world trade.
Yes.
Because every single deal is a new negotiation.
Yep.
So here's where gold will step in as the convenient way to actually benchmark things again.
Yeah.
Then aren't we now going back to last time, in a way?
To be honest,
USD used to be back against gold, right?
Correct.
Yeah.
Correct. I have the same feeling. In fact, I kind of not only this part, I even bring it even a long time ago. It's like barter trade days. It's like, go like even war time. Like our parents' time.
Yep.
Nobody say, hey, when you're at war, you can't be, let's say you got no cash or inflation. Like gold is always the one that people are bringing along. You see in the movies also, like when they run away from the house, they were like bringing a pack of their jewelry and just grab and go. That is the one who brings a lot of value, rather than the the currency, the tangible currency of any country. Somehow it will not be on the same value of physical gold, I would say.
Right. This is a little bit of a curveball question, right? Because I think nowadays a lot of people are saying that cryptocurrency is the new gold in the world, like Bitcoin and so on. I personally, at this point, have certain questions still, although I am a crypto investor myself.
Oh, okay.
But what are your thoughts about it? Will crypto ever replace gold in that sense, in your opinion?
In my humble opinion, I would say no. I believe things in that, number one, highly regulated, and I want something be tangible, such as gold, right? Crypto is something that we can't see, we can't touch. It's on a digital world, right? I understand people come to me that, oh, I make so much from Bitcoin, I make so much from this crypto. I said, congratulations,
More power to you.
Yeah, I'm happy for you, but I would not have the FOMO kind of feel,
right.
like, oh, I missed out on this crypto. Because to me, there are so many other assets, or should I say, a more regulated and more safer assets for me to invest in, which is regulated by like in Malaysia, be Securities Commission, then by Bursa Malaysia. Somehow I feel safer if it's being governed by all these authorities rather than going to crypto that is not. And you say, can crypto replace gold? I dare not 100% say no, but not in the near future. Right. Gold has proven for decades, or 100 years, is there. The value is definitely remain, at least. It bring value rather than something that I can put this way in Malaysia. How many places can you pay by paying by crypto? You can't. Of course, you might say, oh, you also can't pay by gold. Yes, I understand that. But at least we know one day, if we need to, I can. I can just bring 1 gram of gold. I say, nah. I accept it because it's something physical. As a receiver, I will say, yes, thank you. I'll keep it. But in the kind of crypto, even if you say I scan it to you, I say, I'm not sure whether this is real or not. Can I really transact it and change it into real money? That's something that I wouldn't be comfortable with it, to be honest.
These are some of my personal thoughts. I think some of the countries currently, they're kind of debating whether do they want crypto as part of their reserve, right? I'm an investor of crypto, but when it comes to will it replace, here's my personal opinion as well. I'm just imagining, right? Gold actually is mainly a storage value especially when things are chaos. Then it becomes really an outstanding asset, right? So my measurement very often is how chaos can the world be, right? I was thinking of myself because crypto is very much running on the internet. If someone turned off the internet, then I'm gone.
Correct.
It's only there if I have internet or I have some sort of electrical charging, because things like go out of battery and so on. Because
you haven't mentioned about hackers.
Correct, yeah. So like my phone, no battery, right? Let's say the world goes out of power, right? I got no battery, right? There's no way I can scan my crypto.
Correct.
Right? And here's where gold becomes a more tangible replacement and
more reliable.
Yeah, or more reliable in that sense, right? So I guess that's the one issue that no matter how much one person believes in cryptocurrency, you can't deny the fact that there is this problem that's still unsolved. Now, and definitely as we go down the scale, then there's a question about, at the end of the day, it's about food supply, security supply, and so on, and those will be important, reserve importance. But that's world chaos. Right? Like crazy chaos kind of thing. Now, so let's change the topic a little bit, going back to it, right? Is maybe let's explore a little bit the relationship between inflation and gold. Because at the back of all this gold price right now, there's a huge issue that drives it up. It's actually the issue about inflation as well. So maybe can you explain to the audience a little bit, right? What is the relationship between these two, gold and inflation?
I think gold inflation also will come to currency as well. It's interrelated, if you ask me, right? When value of, let's say US dollar, let's say it depreciates, right? Means value of dollar come down, then you need more dollar to purchase an item. That's why we call inflation. When that happens, people will be thinking, instead of putting into currency, buying more currency, they probably want to buy more gold. So that's where the gold prices might increase as well, right, in tandem. Like when I say relationship, I would say when inflation is high, people tend to buy more for gold.
So the demand comes in and that's why it pushes the gold price up, right?
Correct, yeah. Especially when dollar is cheap. Let's say for Malaysian, right, for a reason that, US dollar is weak now, it's cheap, then it makes more sense for me to buy into gold now. When demand comes in strength, then of course the prices go up, That's common sense.
Right.
Yeah, I would say.
So before we go on to the next part of this interview, where we are going to talk about how gold is being used in the investment world today, because I understand that gold today is not just a store of value, but rather very often at the derivatives world especially, it is used as a tool to actually predict markets and to understand where the market is headed to. But Fed has been talking about reduction of interest rate, and it seems like the hint of reduction is getting higher and higher, right? More and more. A lot of people are predicting that it's going to happen. Now, so what do you think is the direction and relationship with gold value moving ahead, so that the audience can actually understand a little bit better what's the relationship between interest rate and gold price?
Okay, I'd like to put a layman term for ease of audience. It's very technical. Science, we're trying to make it simple. If a bank FD is when I say interest rate reduce, which means that if I will bank in my money into the bank, I will get a lesser interest income. Instead of putting there, why not put into something that can bring more value in terms of appreciation? Gold again is the one thing that I can invest in, rather than saving our money into the bank or putting our money into the bank, which the return will be much lesser than buying into equity, buying into gold, buying into properties. Again, so if you say interest rate down, I will foresee gold price be up as well.
Last more curveball question again. We have seen over the past 5 years at least, the market has not really been behaving according to the usual theories, right? I think for many seasoned investors, these last 5 years was like, wow, like isn't things are supposed to be behaving this way? But at least textbook taught us that, right? Yeah, and it has been proven to be correct for many, many years. But over the past 5 years, things has been really kind of going haywire a little bit, right? Yeah. I mean, in the end, it still fall back a little bit, but the process may be a little bit different. So with all that being said and all the general relative theories that we talked about and how gold will respond, how long do you think that this trend will continue? Or are you fairly certain that, I think gold is here to stay as an investment and it can be used as a safe prediction tool, or how people to use it as?
For this, I think we just can't decouple ourselves from gold. Talking about the geopolitical uncertainty or talking about central banks' decisions, somehow or other it will always come back to gold. If we can bring away from that, I will see no chance of it, because somehow people will still go back. Like for myself, it took a price itself, Like as I mentioned just now, when 2018, 2019 was 1,000, 1,002, and I record pre-COVID was probably about 1,008 and went to 2,070 in August, and now it's 2,004, The demand has always been there. Whenever there's any anomaly in the market, any incident or any drastic, or you say havoc, you can use a havoc word, people will rush into gold. Until there's another asset, maybe they can replace. But so far, I can't foresee any. Crypto might be one of it, but I think it's still distance away from coming near to gold trading. It's simple. You want to see a real predict, right? You mentioned the word predict. It just can't stop myself from thinking the COMEX gold. The gold futures being traded on COMEX on CME Group. It's like you want to know whether it's going to be political stability, for instance, right? Just look at the price of gold listed on COMEX, the price. If it's around now, I think it's 2004. I would say it's very little chance for seeing below 2000 for the time being. But there'll be news talking about 3,000, talking about 2007, It's more on the uncertainties of the market which make the speculation even more. And that's why a lot of people are predicting the price will go higher. I do not know how high it's going to be, but what I can think of will be, it shouldn't go that low, right? It will still be there. Like it or not, it will still be a benchmark for whatever situation, right? It's hard to be replaced, to be honest.
Right. Can you maybe help us to explain a little bit, right? Gold today is not as simple as last time where you just take a gold bar, right? Aside from like paper gold, which is much easier to understand, it's still gold, just that it's in digital words and someone else keep for you in that sense. I think a more interesting one is like gold futures and derivatives surrounding it. Maybe can you share with us what are the derivatives surrounding gold that's available? What are some of these products?
Yeah, gold futures, as we know, is exchange traded, right? It's just as simple as going to CM Exchange or any other exchanges and see the quote price there. It's simple as buying and selling a stock. There'll be a bid ask. Gold price as well. You can just go to exchange and buy a bid. If you want to buy, you just get from the asking price, or you can queue a lower price at the bid. It's not hard actually, if you ask me. It's more on getting into more knowledge before you get involved into future.
Yeah, that's right. So future is more complicated. Can you share with us actually what is gold futures? Like, how does it work?
First of all, gold futures is standardized. It's always standardized contract. Otherwise, there'll be a lot of variation. So everyone will be buying at the same standardized contract on respective exchange. As I mentioned just now, COMEX under CME group, we can just go to COMEX, look at the gold futures price. If you're a buyer, of course, you choose a price to buy. And each contract, there'll be a different contract month, we call it, right? What is contract month? Actually, it's more of a expiry. Let's say
Expiry?
Yeah, okay. Now, let's say I buy an October month contract, right? Which means by end of October, there'll be a settlement price
There'll be a settlement price.
for that contract, right? So if I'm a buyer, for instance, I bought at today's price at 2004, for instance, and come to end October, when it come to the settlement price of 2006, I made a good $200. Of course, this is not the actual value because each contract will have a different value based on the tick size. That's why I mentioned about standardized contract being listed on the exchange. So before we go about trading, of course, we need to check the contract specs, which I mentioned. First of all, which month contract you want to buy? How much is the tick size per lot? Per movement, how much is it? And most importantly, for futures, is always a margin requirement. The margin requirement means it's like a collateral. If like going to the bank, I put in a $10,000 deposit, right? I'll buy something. The margin requirement was something that it shows that if let's say margin requirement $5,000, my account got 10,000. Yes, I can buy 2 contracts. If I got 10,000 and the margin is 5,000, I can't be buying 3 because the max I can go is 10,000.
Right.
Before you go into future trading, first of all, of course, I mentioned you need to really go into details like what does it represent.
Wow. So when it comes to futures, there's a lot of things to unpack, right? So maybe the first question here is that when someone is buying a gold future, are they actually buying gold or are they not buying gold?
It's more like as good as owning the gold with a predetermined price at a later stage.
Oh, so it's kind of like I buy a promise.
Yes.
Right? So it's like go in there and then I say, I want to buy X amount of gold for this price.
Yes.
On what date? Like
Correct.
that.
You're right.
So that's more like I buy a contract in that sense. So if let's say I buy this contract, and then does it mean that on that day they will deliver me the gold, or I need to sort of supply the gold to the person?
Either way. So if you're a seller, then you're supplying the gold. If you're a buyer, then you are receiving the gold. Right? For futures, there are 2 methods. It's either physical delivery or cash settlement, depending what contract you're owning. Some contract requires physical delivery. Some contract only for cash settlement. So it all depends.
So it's kind of like, first I choose my position. I say I want to buy a gold future, which means that I promise you I will buy this amount of gold at what date.
Correct.
So on that day, I have to make sure I have the money to pay for the gold.
Correct.
That's the first kind, right?
Yes.
Then the second kind will be a selling contract, where it means that I promise to sell you X amount of gold for X amount of price on X date.
Yes, correct.
Then on that day, I have to make sure I supply deliver that gold, or either pay you that value of gold in that sense, in the form of cash right?
For seller, would be receiving gold. You're saving the money, but you are providing the gold to me.
I provide you the gold
But
okay.
This is a bit of correction would be, it's not only subjected to the date that we mentioned, along the way. Let's say now it's August month, right? We have the October contract. Let's say today is 1st of August, for example, okay? From 1st August until end of October, before the expiry, you can always transact, or you can close down the position. You can liquidate or profit take the position. You don't have to wait until the last day.
Right, so that's where the trading kicks in, right?
Yes.
Where I don't have to wait until the settlement date. And in fact, unless you're using it for commercial purpose, where you really want to buy gold for like, say, semiconductor or whatnot, generally the use is to trade right?
Correct.
And so what happens is that, let's say I promise to buy the gold at 2,400 because I believe that in the next 3 months, the price will shoot up to 3,000. So let's say halfway through, in 3 days later, the price shot up suddenly to 2,006. Here's where I can choose to sell off that contract or close my position in that sense.
Correct, absolutely right. You
So
don't have
I
to
earn
wait
that
until, yes, correct.
Extra to 200 ringgit? $200?
Correct. You're right.
Okay. And selling works?
Same, vice versa, same
Vice
concept.
versa?
Yeah, same.
Right. So this next part here is this, right? We understand gold futures trading now. But one thing I hear a lot when I read newspaper and I read business sections is they always say this thing one. Oh, with gold futures going up, we are estimating that equity market to be more like what, or we are estimating these kind of things to be happening. Wow, it's like as if gold future is an oracle ball, you know. No. Then after that, you can know what's happening all around the world.
Yep.
So it's kind of like a prediction tool. How does that really work actually?
Okay, this is very interesting, okay? Because if you talk about many years ago, there's a relationship between equity and gold is this way. When equity is not doing well, gold price will go up. But if you notice recently, equity is doing well, gold price is going up as well.
Yes.
Right? So you asked me about predict. I think now we have more challenges now. It's not as simple as 1 + 1 = 2. Right? It's very abnormal in that sense.
But how was it like before this?
Before that, as I mentioned, it would be equity up, gold be down. Equity down, gold be up.
Right.
So it became like inverse relationship. But if you think from investor's point of view, if I'm an investor, if I'm a portfolio, I would want to include gold in my portfolio. Simple reason. For stocks, people buy. They rarely short sell. They hold a pool of counters, various counters. But you are naked in the sense that if market crash, you lose everything from portfolio. Huge losses. But because of relationship between the gold and equity price, you can always include the gold in the portfolio. For instance, I hold 1 million worth of stock holding. If market is bad, down by 50%. It's naked, as I mentioned, you're down by 50%, 500,000 gone. But if you hold a gold position as well, long gold futures, I mean, what high chance is when market is down, equity market is down,
right?
the gold shoot out, you know. From what you gain from the gold futures, you can probably offset what you lost or losing from the equity market. So it's always wise to include gold into your portfolio. If you're talking about prediction, yes, you see gold prices go up high. I mean, a lot of time there'll be a lot of uncertainties. More often than not, when volatility comes in the market, and I mean, we love volatility, yeah. But having said so, you also need to measure risk.
Yes.
Right. I don't want to volatile in a way that I'm losing my portfolio value. I want volatile in a way that I can play up and down. I can trade.
Out of the volatility.
Exactly.
Not lose money out of the volatility. Right?
Yeah, exactly. Especially for futures, we love volatility. We do not want to have a calm sea, right? Nothing, no movement. Then we'll be like so restless. But for futures, we want the zigzag. We want the big wave, up or down. Right. That's what we want.
Right. So having said that, right, it means that let's talk a little bit about the overall idea here. Is that even for a normal investor, right, we see that generally, especially big institutions, they will have some sort of a futures in their portfolio. It's not because they're traders, but rather it's for hedging purposes.
Yep.
So they offset the losses.
Correct.
Now, on the other end, we were also on that subject about prediction, right? So does it work this way, right? When you see more people are committing to the buy side of the future at the current price, then you can kind of estimate that people's sentiment towards the market is actually, I expect that the gold market is going to shoot up. It means that people are kind of expecting more volatility per se or something like that. Yes. Is that how the prediction works? Do you have any specific like use case scenario that you can share with us in that sense?
I think Russia and Ukraine war will be a good example. If I'm not wrong, that was in 2022. That's been 2 years now. When war comes in, definitely we can say political instability, then it will affect the whole ecosystem of supply and demand in terms of goods, That's where gold price will show as well. It's always the fact that people rush in to buy whenever there's such a situation. Other than Russia and Ukraine, you can even think of our most recent COVID case, 2020, right? And people know that market's crashing down. Again, equity down, gold price will shoot up. Somehow, it should be that way.
Right.
If you want more example, more than that, Brexit, UK left European Union, gold price shoot as well. Because we do not know, after they leave, what's going to happen? Are there going to be changes in the currency they're going to use?
Right.
Because at one point, we were talking about Euro, trying to replace USD, right? But what is it now? We do not know. In fact, I might want to think of BRICS, right? Brazil, Russia, India, all these countries. With the involvement and also the growth of BRICS, you can see the gold demand also is high, and hence pushing up the price even more. So what it can indicate, let's say prediction. So it's like, gold price means price up. Maybe BRICS is getting stronger. They're getting wealthier, more wealthy. Right? Or are they going to store more gold as a reserve? Those are prediction can think of. You want to go into more detail, it can even be interest rate or inflation, as you mentioned earlier. It's always gold can indicate or predict a lot of situation in the world. Either it's inverse or even it's in tandem. It can be both ways.
Right. So usually during chaos, what we'll see very often is gold futures volume will suddenly just spike up.
Oh yeah.
Right.
Yeah.
Yeah. And if let's say we see gold futures, the sell position, spike up, what does it mean usually?
Sell position spike means people keep selling.
Yeah, correct. Because originally we talked about like if let's say more people are buying gold futures, then it means that they think that more volatility is coming, and therefore usually it's a sign of chaos, right? Yeah. But what about the other position, right? Then how does it then relate?
There's two parts. Okay. Number one, if I'm a physical player, I do mining gold as a business. Means I got physical stock, right? So when the price shoot up, I would like to capture my profit. I might think that 2004 is a good price to do a sell on the futures, and I offset it by my physical stocks of the gold. My cost could be 1,002, 1,003, but I'm selling at 2004. Why not? That's one. The second part would be more on the trading, or you say prediction, right? When do gold price really come down? That's the reason why people want to short sell. You only short sell when you think that the gold price is coming down. Hence, I want short sell. So when? That's how we mentioned about inflation, right? We mentioned about interest rate. More often than not, the thing will come down most likely when US dollar strengthen. How US dollar strengthen? Interest rate higher. I think that happens in a few years back also. There was, I think, pre-COVID where there'd be a lot of rate hikes, we call it. Right?
Yeah.
That's when the gold price came down. So it always brings some indication what's going to happen in the world, as I mentioned again. Again, the word prediction. Gold price can predict either way, both up or down, depending what you want to look at.
Right. So what we can say is that when you understand the broader economic theories and the macroeconomic theories, gold becomes a very good indicator for people to observe the market and kind of have an indication of where the direction could be heading. Well, definitely we're not saying that it's going to be 100% correct, but it does tell some things or another.
Yes.
Yeah. So like, for example, when we were saying that people are selling, maybe it's because gold mines are starting to think that, hey, maybe the demand will be softened, so why not we lock in the price now?
Yes.
Then you need to think, why would the demand be softened? Is it because of there's rumors that Fed is going to increase interest rate?
Yep.
So that's how you start playing with it and play out scenarios and hypotheses in your mind.
Perfectly right. Correct.
So that is why gold makes quite an interesting crystal ball there in that sense.
Kind of, yes. Yep, it's a crystal ball.
Yeah. Do you think that there's a lot of people who actually look at gold, right? And they're like, as they use gold as an indicator for the different assets that they're investing in, eventually they became so familiar with gold, they started trading gold futures instead.
Oh yes. Yeah, why not? Because number one, in futures we talk about leverage. I think we've never mentioned this word since just now, leverage. But I mentioned about margin requirement. Gold futures trading, you're only using a small portion of amount of money to purchase something which has high future value. Right? Just like you're buying a stock. You buy a stock which is worth $10, you really need to pay up $10. But we are buying gold, price as 2004 for instance. We could be 2004, that one is the benchmark price. But if you want to look at the actual face value, it should be about 240,000, let's say. But you're only paying 10,000 as a margin requirement to trade into gold futures. If you want to count percentage-wise, you are using only 4% of the actual value that you're putting in 4% of the actual value to own something that you do not own, but you can own in the future if you want to. And also to capture the in-between volatility and capture the profits in between.
Right. Maybe I'll give you a case study scenario of how I as an investor can use this, because after you've shared all that, then it gives you a better picture of it as well. So maybe I'll just share with you, like, if I were to do it this way, what are your comments about it? Do you think I'm doing it correct by making use of a gold future within my investment portfolio?
Sure. Yeah.
Let's say currently right now I'm an equity investor. I have 100,000 in my investment portfolio. Say about 80,000 is actually invested into the stock market. Maybe it is say tech stocks, and everything else, right? And because all these are upfront cash, right? We already paid, settled everything all, right? But I am quite worried that the market will say take a dip. Yeah, I'm quite worried that the market will crash. But I don't really want to sell my tech stock. I don't really want to sell my investment because I truly believe in it as a long-term investment. Yeah. So what I can do is maybe take out, say, 10,000 ringgit and I buy into a gold futures. Why? Because for the 10,000, I already have a margin, which means that although with 10,000 ringgit, actually my holding position, let's say it is 50,000 worth of gold in that sense. Random number, not correct technically, just easy mental calculation at this point. Then what happens is that if let's say my 80,000 worth of stocks take a dip, say 50% dip, my paper value for my stock loss is 40%. But stock price immediately shot up by 40% as well. So what would happen is I would gain about close to 25,000.
Yes.
Right? So what happened is that although I took a loss of 40, but I gained about 25, so my actual losses is actually only
15. Yep.
Now then I can use this excess amount and ask myself this question, what do I want to do with it?
Yes.
If let's say I think that it's a good time to buy low, I can just cash it out, take this money, pump it back into more units of equity, where later as the stock price goes up, my position gains significantly again.
That's right.
So that's a correct way of looking at things?
That's a perfect hedging tool. I mean, hedging strategy, I would call it. Yeah.
Right.
Rather than leaving it naked on one side,
Yeah, so I don't have to invest heavily, but I can use a small amount to leverage and hedge quite significantly in that sense.
Correct. That's the beauty of futures, leverage. That's what we always do.
If let's say nothing happens, then all I need to do is just make sure I sell it at same price or either just a little bit of profit margin. Or even if you...
Even loss is fine.
Even loss, we are talking about losing of like 1%.
Just like buying insurance to your stocks.
Right, but my stocks already went up significantly, right?
Yes.
Yeah. So that is the whole idea behind, as long as I close my position before that date lah.
Correct. Yeah, definitely. You have to.
Right. Again, just now it's just a case study. It depends highly on your personal risk appetite. So please do not follow that strategy.
Yes.
I'm just throwing it out as a case study. Now, thank you very much, Kelvin, because I think I've learned a lot. It also gave me a very good picture of how can I really make use of gold or gold futures in this case within my investment portfolio, despite the fact that I'm not a trader myself. Lastly, before I go, is there anything that you can share with us for new beginners out there if they want to start approaching and understand gold futures? Because we understand that there's a lot about contracts. There's a lot about like all these kind of different things. It almost feels like I need someone to guide me through, right?
That's right.
Yeah. So how would you advise a new beginner to go through with this process?
I think number one is on education, right? Anyone who comes into the futures market, first of all, they really got to do their homework. Homework in the sense that either, like you said, go to a broker, someone to guide them. Of course, go to a certified broker, which is governed by the authorities, be it Pusar or Securities Commission. Also go to respective exchanges websites, which you can get a lot of info on all products or selected products contract specs. As I mentioned previously, also you must know what are the contract months available, what are the margin requirements, what is the tick size value, when is the trading, what time is the trading hours. All these are very important, including, last but not least, the method of settlement. Is it physical or cash settlement? All these are very important. Next would be more interesting. For futures, I would strongly encourage on technical analysis, meaning going to charts before you decide whether to do a buy or a sell. Because a lot of time, fundamental, as we shared earlier as well, it might not move as what we thought, just like we think that equity up, gold should be down. But why is it like a lot of time, even now, equity is up, gold is up, But if you just look at technical charts, blindly follow, if you buy signal, buy, sell signal, sell, your risk parameters set properly in terms of you're disciplined enough into your setting your own stop loss when the position is not going as you predicted. Or what charts telling us. For instance, as I buy at 2004, yes, it's a buy signal, but what if it drop below? At what level you are willing to cut? That is very important, It must be in place. That's what I call risk management. Other than that, it's more on probably you can do some paper trades before you go into the real trading. A lot of brokers now, a lot of system actually offers paper trading, free. Just approach your broker, they can guide you how to get about it. Test your skill, whether you are doing it right. Ask your broker or dealer whether your way of trading is correct.
Right.
Once you gain the confidence, then only you put the hardcore real money into futures trading. That's my advice.
If let's say someone wants to begin their journey in gold futures investment or either trading or either hedging, right? How can they approach Affin Investment Bank?
We have a dedicated dealing team, right? Futures dealing team, specified just really for futures itself. We have experienced dealers where they provide you like hand holding, I would say. No.
So it's not like stockbroker at that. Just help me open an account and talk a little bit.
Oh no, we emphasize a lot of after sales service over here.
So your dealer will really sit with me, show me how to read the chart, all those.
We will send you YouTube videos on
Wow.
how to trade. We will send you a margin list where you can see all the contract specs I mentioned. You know, if you go to the website and choose one by one, it's very troublesome and you might lose interest very fast. What we do is our dealers actually have one sheet of margin list, we call it, for each product. All deals are there. Trading hours, per bit size, contract size, physical delivery or cash settlement. It's there. It's a Wikipedia. One sheet, just one. And on top of that, you're welcome to ask questions. Because it's very common that people do not know how to even place order, you know, on the system. Because different brokers might use different system. We call it order management system, OMS. So we even do that. And last but not least, the charting, which is most important. We will share. Because again, you can share, but doesn't mean you're going to follow, because everyone would have their own analysis. But at least what we can do, especially to the new beginners, we can guide them, oh, okay, above moving average is a buy signal, you do a buy. Below moving average is a sell, you do a short sell. On top of that, we are planning to have a simulation trading challenge with CME, right? So it's coming real soon, right? Just sit tight and wait for us to announce when is it going to be. It'll be interesting, it'll be a good way for new beginners or even a seasoned traders to try their hand on trading, whether you are really that good. There'll be good prizes, you know, waiting for you.
Oh wow!
So just wait for it. You know, I can't disclose too much now.
So all right, thank you very much everyone for joining us in this episode, and thank you Kelvin for sharing your valuable knowledge with us. And if you'd like to find out more about Affin Hwang Derivatives Investment Services, you can check them out in the link provided below. So thank you very much, Kelvin.
Thank you.
Hope you guys learned a lot. Click subscribe and share this video with your friends. See you guys next week.